Traders, the euro yen is bearish. It's going to go to a 4-hour chart. I want to show you this. Look at this beautiful trend. Sweet. Lower highs, lower lows. Okay, and we're looking for swing high, swing low, retrace, sell, swing high, swing low, retrace, sell, right? Not so fast. There's a way to go about this because it's going to catch you out. Let me just show you a couple of things here. I'm always looking for these swing points, and around the current price I'm going to be pulling my path tool, mapping out what it is I'm looking for and how I want to get involved. And my strategy is always the same. I explain this in just about every video. I'm looking for when it pulls back and it starts to rotate. So that's something that I want to explain in this video, my strategy, how I trade pretty much. Okay, so we're interested in these, and then there's going to be, that's going to happen, right? But everywhere you look back, it's in a downtrend, but they would have caught you out a couple of times with this here and this run on liquidity above here. So, these are the times when things get a bit tricky. So here's the thing. Friday, all right, here we are. We're Friday. Let's grab that, mark it up. Let's go back and have a look at the last Friday. So that was Wednesday, Thursday, Monday, Tuesday. All right, look at this, guys. There's Friday. Notice what happened on Friday. And Friday, Wednesday, Thursday, Friday, Sunday, Monday. Look at that. See, Friday. All right, bearish trend. Wednesday, Thursday, Friday. Let's just do this because we can measure it easily this way. Roughly about that, okay. And a Friday, Thursday, Friday, 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 Sunday, Friday, okay. So the thing you want to be careful with is this fairly aggressive Friday into Monday thing that actually ran all week. It's not easy. It's not easy trading, guys. Like, this was bullish all week. It's a bearish market, but look what happened here. And here's the other thing. Wednesday, have a look at Wednesday. Tuesday, Wednesday. Well, that was Tuesday. Yeah, I've been seeing quite an aggressive stop run on Wednesdays as well. So, it's in a bearish trend, but Friday through to the end of the week doesn't necessarily mean it's going to be trending bearish. But in saying that, I'm always going to be looking for a sell. I don't want to be buying when I can see the 4-hour chart trending south. So I'm always going to be looking for wherever this rotates. You want to stick with the trend. Definitely stick with the trend, guys. It's worth it. I'll explain something, right? So you want these rotational, these points of rotation in a downtrend. How do we know it's in a downtrend? You can throw a exponential moving average on here if you like. The 9 and the 18. And if it's trending, above it, we're in a downtrend, and you'll see it. Right? I mean, look, obviously, lower highs, lower lows, we can see that's clearly in a downtrend, right? So I'm only going to be looking for a sell, and what are we going to do here? Well, I'm going to come back and show you what I'm looking for to get involved here, but just watch out for the Friday aggressive reversal or run on liquidity that's occurring generally on Friday into Monday. So from here, how do we get involved with this? Well, I tend to map it out on the higher time frame, and I'll grab a fib, and I'll always pull it from the previous swing to the low, high to the low. And I'm looking at the range from the previous swing. That's my trading range. So I want to pull back into equilibrium, the 50 of the fib here, for a potential entry point, no matter where I am, right? It's a downtrend, so I'm going to be looking at the previous swing high to swing low, and it's the pullback into equilibrium that I'm looking for. That's where I want to get involved. Well, I want to see price move back into this area. Wherever you go, it's going to be the same story. You pull your fib, swing high, swing low, and you're looking for the equilibrium, pull back into equilibrium, right? Pretty standard sort of a thing, right? There it is, swing high, swing low, and there's an entry point there. Now this will catch you out. Look, so we do that in our bearish trend, swing high, swing low. There's equilibrium here. How did we get caught out? Well, let me show you this. This is a point of interest. Let's just grab something. Hang on, grab an eye. So that's your 50% here. Why do we not get involved with that? And why do we get involved with that? So how do you escape, or how do you work around? How do you avoid getting caught here? So for one thing, you don't want to just set a limit sell. Let's have a look at these two levels here. And we're going to go down to a 15-minute time frame, and I'm going to show you something. The 2 eyeballs is what we're looking for, and then we'll come back to our current price. Okay, so why wouldn't I get involved here? All right, so on the 4 hour, I'm marking up my swing high, swing low, and this is my point of interest. What I need to see when it pulls back into my point of interest is this. It's pretty easy. Grab your path tool, and on the lower time frame, you're looking for the same thing. You're looking for swing low, swing high, retrace, 50% buy, right? Well, you don't want to buy because it's counter trend. But you'll be able to, well, that was a bit, you'll be able to follow these price swings until you see a break of market structure. See how these are higher highs and higher lows? Well, we know that we want to get involved here because price is doing that. Right? So you want to avoid shorting it when this is trending up on the lower time frame, 15-minute chart. The higher time frame point of interest is going to be the thing anyway. So we're waiting for this to rotate, and you get the break of market structure here. Well, this is where it shifts gears, right? And then we look for swing high, swing low, retrace, sell. That's it. It's easy to say this in hindsight, I know. I've got a whole system that is designed to look for these opportunities. And you have to align the higher time frame, trend and momentum, sentiment, everything like that has to align. But simply put, we're just looking at the 4-hour chart pullback. Like here, for example, this is the 4-hour high-low retrace into equilibrium, 50% there. So we're looking for this rotation here. And then what we do is we go down to the lower time frame and we mark it up as we did on the 4A. So now it's higher highs, higher lows, right? And then lower high, lower low. And that's your break of structure. Get involved. Easier said than done. And it's easy to look at a chart in hindsight and do that. But as I said, I've spent pretty much my lifetime working a system that gives me this pretty much. Anyway, it's the same story. When we go to the current time, right, we're looking at the higher time frame swing points. So there's a high, there's a low, there's a high, there's a low. And if that's the case, I'm looking for potentially a pullback into equilibrium. But we've seen that it may or may not rotate, it may or may not pull back into here and trade how we want it to, right? So here's what we're looking for. This to trade up. It might do its thing there, but it's Friday. Okay, so we might even get a deeper pullback as it possibly hunts liquidity up in here. Sure, fair enough, okay. But at some stage, it's going to range sideways, and then we're going to be looking for a move. This is the algorithm basically enticing sellers in, creating stop loss liquidity above, taking it out, and then we get the displacement, right? Retest and fail, and then we're off, right, to the races. That's your price action. I want you to have a look here. See this? Let me just grab my pencil. We're looking for the range. We're looking for a bit of I call it the fakey shaky chart pattern. The fake out, it entices sellers in, the stop losses go up, and the algorithm will hit those stops, and then we see the lower high after this price action. So that is exactly what I'm looking for on this, and it could happen here, it could happen here, wherever it happens, guys. That's it. That's the secret to successful trading, in my opinion, is to master this. And easier said than done, looking back in hindsight. And again, as I mentioned, I'm constantly working on this, setting up systems that give me the best opportunity and tell me exactly when this is kind of happening, and then the continuation if it's carry on with it. So, what I mean is if we scrunch that up, then wherever that lands, the next, okay, then the next, and on it goes. But at some stage it'll turn around and bite you because now it'll reverse on the 4 hour. In any case, guys, look, that's my take on the Euro Yen. It's bearish at the moment. I'm expecting quite an aggressive pullback on Friday. So I would just, encourage you to be aware of that Friday, Monday, and just see if this price action plays out and gives you an opportunity. So with that, yeah, I mean, this is why I don't like to trade Fridays. I guess that's the title of the video. Why I don't like to trade Fridays and Mondays is because this aggressive pullback is happening. And here's another thing, just quickly before I wrap it up. There's a candle. We've got a bit of a wick. Oh, hang on. We'll grab this thing. By the way, I would love you to comment, share your thoughts. What do you think? Comment below. Candle. Okay, so we're in a bearish trend, and we're looking for the open, the run on liquidity, the trend for the day, the week, whatever, right? The low and then the pullback, right? So if this is bearish and this is Friday, we're looking for the low and then this pullback, and then Monday kicks off, right? Here's a Monday candle for you, possibly. I don't know, but just be careful. There's a bearish candle there, right? That's a bearish candle. That's the wick. Monday kicks off. Watch out for that. So you've got the Friday pullback from the low, and then you got the Monday pullback from the entry point, hitting liquidity before you see it continue. Just watch out for that. Okay, that's my take on the euro yen, and I hope you have a great day. Safe trading, and wow, look at that messy looking chart. See you in the next one. I'll leave that there. That'll show up in the video.